Thank you, everybody, for taking the time out of your day or evening to join us. I'm Marcy Turman, the COO of Panxora DIgital Ventures. My partners and I started working in cryptocurrency in 2014, and we started the investment arm of the business last year in 2019. This workshop is about the token investment market. In some ways, you can increase the performance of your portfolio if you typically get involved in a project at the seed stage. What I mean by this is early investment in blockchain businesses that plan to use an ICO or IEO to raise the majority of the funding needed to build the business. Now, seed capital is used to pay for anything around the launch of a token, meaning the ICO, or listing the token on a cryptocurrency exchange. If the blockchain business is based on some kind of community or mass appeal, then community becomes a really powerful resource for raising what can be significant amounts of capital. But it also becomes a benefit, community becomes a benefit if you want to create loyalty in the token, or for developing a following that becomes advocates and users of the facility, platform, or service. Building that community has become a very expensive process, and that means that the seed funding round is also a really important part. Realistically, a token can't expect to gain significant traction, sufficient traction, without spending a significant amount of capital. And that means that we are an important part of this process. What they'll need the capital for is proper legal formation, marketing of the token, and probably these days building a minimum viable product. Now, in 2016 and 2017, if any of you were involved in the market back then, you probably didn't have to build an MVP. In 2016 and 2017, it was much less expensive to do a token launch. Also, it was less of a challenge to raise that seed capital. That's because there were plenty of people who were looking to buy tokens at a deep discount with a view that they would sell it out as soon as the token was listed on an exchange, and at least some of the time make a significant killing. You could make a killing at that point because of the overall buoyancy of the cryptocurrency market and the lack of controls on price manipulation. Well, in 2020, the entire character of the market has changed. But I put forth to you that the potential for significant returns on your investment is even greater. At this point, the potential is not built on a cash grab strategy, which is ultimately an unsustainable strategy because you never know when it's going to fail. It's built on the fact that you can, with a long-term view, you can make much larger returns. Now, we at Panxora are committed to this viewpoint, and we have specific reasons for thinking it so. We're finding that much more seasoned people are entering the marketplace with more reasonable goals and aspirations. Tokens are now raising funds based on actual need instead of whim or the desire to raise a huge amount of capital relatively easily. And also the legal environment is changing in ways that protects the rights of investors. Finally, no one really knows how significant blockchain is going to be in changing the world environment. And investors like us involved at this early stage really have a significant early mover advantage. Now, our goal at Panxora is to create a portfolio of high growth token projects in a way that both maximizes profit potential but decreases risk. And the structure is also important because it supports the development of the businesses we invest in. We do this by forming investor syndicates around a structured agreement that we come to with the token founders. This agreement provides for multiple paths to profit, which is pretty unique, I think, in the industry. It's also designed to mitigate risk for all syndicate members. And Gavin Smith, the CEO of Panxora, will talk about this later in today's workshop. We'll also introduce you to founders from 3 outstanding projects that Panxora is set to invest in. And I've asked the head of business development for Coiny, the company that we partner with who does crypto custodian work for Panxora, to talk about their model and how it decreases risk for many kinds of crypto-facing businesses.